All right, we are live. Welcome everybody to the 2026 market forecast. We are going to get started right now. This is recorded. You'll get a copy of the slide deck as well for this presentation. Any questions you have, I'm happy to kind of follow up as we kind of head into the new year. Merry Christmas, happy holidays, happy new year to all of you. And it's been a great year. I hope it's been the same for you. And as I share my screen here, looks like we have about 12 people in the webinar right now, which is great. And again, there's going to be a lot of you that will be watching this later as real estate professionals. Where is the market based on kind of economic forecasts, unemployment, CPI, which is inflationary indexes that are coming out? Where do we see rates trending in the new year? What are ways you as a real estate professional can go target niche business and then also partner again with who your lender is? A lot of your conversion success in 2026 is going to be predicated on your ability to be able to have a solid lending partnership who can help educate and convert the business that you are getting in. I think a lot of us right now realize we may not have a lead issue, we may have a conversion issue. And the lead quantity may not be there like it has in years past. And we've been dealing with this for a couple of years now. So, how do we take the leads and clients that we have and make sure we're actually converting them, educating them, and speeding up that buying cycle and helping getting them into a home? And who you partner with on the lending side is a huge part of your success in that. And we'll kind of dive more into that. So, as I share my screen here, again, um, I'll have all these PDFs available for you to access, and I think this will be better. Yeah, so we'll do this. And so in 2026, where's the economy trending? One thing we in the mortgage arena look at, and economists that are out there on the direction of rates, ultimately comes down to how is the jobs market? Unemployment report came out last week. We're recording this as of 12/17, and the unemployment rate ticked up to 4.6%. Some of you may have children. When I have a 5-year-old and a 2-year-old, two boys. Some of us may have older kids that are in college or are recent college graduates. And you're staring at, well, what's the unemployment rate of college grads with bachelor's degrees of age 25 and higher on the left side, and on the right side between the ages of 20 and 24. You can see unemployment for them has ticked up. So they're entering the job market with a little bit of uncertainty. A lot of them have high student loan debt. A lot of them are not being promised the careers they thought they were getting, or they're not applying their degree into the real world because those incomes are not matching the cost of the education. I'm sure a lot of you, again, parents maybe have kids this age, are nodding your heads in agreement. And so, what does this mean for the economy and for people's confidence levels? And you can type this in the chat. Does this bode well from a confidence standpoint for somebody that would be looking at taking on the largest financial purchase of their life and purchasing their first home? Does it give them much confidence or little based on the fact that the unemployment rate has ticked up? Yeah. It's not giving the youth a ton of confidence right now. And so if you look at these gray lines, that designates there was a recession during this period of time. So you can notice that we entered a recession in the early 2000s, unemployment shot up. 2008, we probably remember that for those of us in the business, the great financial crisis, GFC. Look what happened to unemployment. It shot up when we entered that recession. Same thing in 2020, COVID. We had a very small recession when we were locked away in our homes for a while. Unemployment shot up, and then you can see it recovered quickly. So I share this with you because right now the unemployment historically is fairly low at 4.6%, but it has went up. Massive credit card debt, student loan debt. A lot of the college grads are having a hard time finding jobs right now. And this is just a pulse of what's going on out there in the economy. And if you take a look at the CPI report, which is a consumer price index, which measures the cost of certain baskets of goods, inflation has not particularly cooperated recently. And you can see kind of it spiked up in 2021, 2022, which is why the Fed increased the Fed funds rate at such a drastic clip to try to slow the economy down and get the cost of goods to drop again, which they successfully have done. And then we've been kind of hovering in this kind of 3% high twos range for a while now. The CPI report came out this week and a little bit better than expected, which is good news. And that's caused mortgage rates to kind of improve a little bit, which is great to see. And so, again, those are the two things that we look at on where we see mortgage rates headed is based on unemployment, where if unemployment goes up, that means there's, obviously more of a shaky economy. Mortgage rates should come down a little bit based on that. Same thing with the CPI reports, PPI reports, which is the producer price index, measures the cost of manufacturers, how much does it cost to make goods. We want these numbers to come down. And they just did a couple days ago on the CPI side, which is, again, a welcome relief. That being said, the economy, we don't really have our actual numbers for a lot of it. The fact that the government was shut down for 45 plus days. And so some of these reports that are coming out have kind of outdated data. We haven't had the last couple of months of data. So we have to take this with a grain of salt. Very kind of weird times we're in right now. But you can see that the inflation is kind of plateaued in this like range. And we're not seeing a ton of improvement, and we're not seeing it really get progressively worse. So we'll monitor this in 2026. And so this kind of goes into where our rates headed. And we want to look at kind of this bluer line, 30-year fixed rate mortgages, which follow the 10-year treasury. So if you ever hear, I don't want to make you a mortgage nerd, but it's good to have your pulse on kind of what causes rates to move, and ultimately what do we on the mortgage side look at. Follow the 10-year treasury. If you ever just Google that, you can look on CNBC or whatever, and you can see, well, what's the 10-year treasury doing today? The movement of that, as you can see following this graph, kind of dictates where 30-year fixed mortgages are going. And they follow in tandem as you kind of look at the blue and red line here. What's the forecast for 2026 through 2028? You're going to notice they're forecasting rates to kind of stay in these levels, and as we extend out to 2027 and 28, even tick up a little bit. Where are rates right now? All my real estate friends in the class, where are rates right now? I'll show you I'm not a huge fan of Mortgage News Daily, but you go to this website and you click on mortgage rates, you can see today's mortgage rates. And it'll kind of give you an idea, what are average rates based on different products. And so a lot of times too, with, you get a rate quote, client is working with Rocket Mortgage, and you maybe say, hey, I want you to talk to my preferred lender, talk to Ryan and his team, at least get a second opinion. The rates that you can get are so varied. It depends on product. Is it jumbo? Are they looking at an FHA, where right now average 30-year fixed rates and FHA is 5.86% on a conventional 30-year. It's at 6.22. That alone is going to confuse the consumer, which is why you want a mortgage professional to kind of educate the client, because FHA loans, while they have these better rates, they're loaded with costs. Mortgage insurance premiums, it's usually dictated for clients with maybe average to below average credit. So if they're in a vacuum just looking at rates, they're not necessarily going to be getting the best advice. And so you look at this, and so you kind of get an idea of what the consumer is trying to look at is, well, what are rates at? I got quoted from this lender, 5.75% on an FHA loan. Ryan quoted me 6.25% on a conventional loan. I'm going to go with the other guy. That's not necessarily a better deal because of the product type. And so we have to educate the client. We'll show you some kind of ways that we do that through our pre-purchase discovery calls and taking the clients through the process. But right now, rates are kind of in the low sixes, high fives range. And so ultimately, we are probably going to be staying in these levels for the foreseeable future. I do think early 2026, we will see rates come down a little bit, maybe another quarter to 0.5%. The economy is going to have to fall off the rails for rates to come down significantly more. And I don't know if that's something we necessarily want, but just be prepared if you're waiting for rates to drop a ton. And we'll kind of go over that question later, which is what we get a lot from clients. I'm not going to buy a house until rates come down. You need to be prepared to be able to answer that question of how to dispel that, because if they're waiting for rates to come down when economic forecasts dictate they may not come down a ton, maybe a little, how do we overcome that so they're not just waiting on the sidelines for months and years and never buying, waiting for rates to come down to levels that may not happen again? And I'll show you the right here, going back to the rate conversation of where rates headed. Let's take a look at the average 30-year fixed rates from the 1970s up to the 2020s that we're in now, which is to be determined of where rates are going to be by the end of 2029. In the 70s, the average 30-year fixed rates were around 8.86%. So if you're taking a $400,000 loan, the principal and interest payment on that loan, not taxes and insurance, was $31.78. In the 80s, which, the decade I was born, rates were significantly higher, averaging almost 13%, putting that principal and interest payment on that $400K loan up to $43.31. 90s, they dropped down to 8% roughly. 2000s, and then the 2010, the decade that we, recently got out of, is kind of what we all hang our hat on and compare against. Average rate during that decade was about 4%. And again, right now we're kind of in high fives, low sixes, and everyone says, well, rates are really high. Well, compared to what? And so I think it's very important that we have perspective, save this and show this to clients to give them an idea of, hey, we're really not actually, historically speaking, in a bad place with rates right now. I'm not trying to be dismissive to the fact that affordability is tough right now with people's incomes, the cost of prices of homes in relation to rates also being a little bit elevated where they've been the last several years. But bigger picture, if we zoom out, they're actually not that bad. And so I think this is something that's very important to be able to kind of have as a kind of ace in your back pocket to use for clients that inevitably will be saying rates are high. And how are you showing up in the rate conversation? And how is your lender showing up that you work with in that rate conversation? If you have this perspective and attitude of, rates are really high, it's kind of this doom and gloom, your clients feel that. You don't want to be kind of, pie in the sky, being unrealistic with expectations and just kind of being aloof to reality. But at the same time, if you have a kind of an aggressive approach or a perception that rates are high, the market sucks, things are bad, your clients will feel that. And that's going to, I strongly believe, it dictates their buying decision. And if they even want to work with you, and is this somebody that they are ultimately going to trust you or your lending partner? If they're not giving them data, but just giving them opinions or a feeling of, you should wait, rates are high, I promise you they'll come down. You can't have that right now in this environment. We need to be real with our clients and discuss, what forecasts are projecting that rates aren't necessarily going to drop a lot. They're likely going to be staying in this range for the next couple of years. Let's talk about a strategy to get you into a house. And if they do drop, great. Your lender, us, we will do a no-cost refi through our rate redo program, what we call our rate redo program, cover those costs for you and drop that rate in payment for free. And so that's all part of our kind of selling process that we take our clients through, that if you ultimately refer to our team or for a lot of agents that we currently work with, that process is designed to be able to give the consumer confidence and get them on the roadmap to buying by just being real with them. Okay. So I think the rate conversation is a homework assignment maybe for you in 2026 is when a client says, I'm not going to buy until rates come down, or I'm going to wait until rates come down. What is your answer to that objection? You need to chat GPT it, you can just throw it in there and you'll get a really good response on that. Or contact me and we can kind of game plan on a way that you can overcome that objection that I know all of you have already gotten, probably several times. We've got to be professionals and be able to have to be equipped to answer those questions that we know are going to be coming up. And we got to kind of navigate our clients through that process. And so, what is your bait for 2026 on how you can go convert your clients that you have and go get new business? And so, just like for those of you that like to fish, you're not going to take freshwater bait and go fishing in the ocean. You're not going to catch any fish. So, what kind of bait are you using to be able to convert? And so, if you go to the bait shop and go, all right, what are the 5 reasons people are buying or selling right now? We call it the 5 Ds. You got deployment, you got the diapers, diamonds, births or marriage, debt, divorce, and debt. The two niches for 2025 in terms of like who was actually converting a lot of the business and buying and selling out there. One was first time home buyers. Are you working with them right now? And do you have a target market to be able to go after first time home buyers through your social media, through home buyer classes, which we teach a lot. If you ever want to talk about that, reach out to me. We have a really good curriculum on teaching first time home buyer classes. It's part of our business model. The second is relocation, and not for job purposes as much, but a lot of it was grandparents selling their house and moving to an area to be closer to their grandkids. That was the second biggest kind of niche for 2025 that was converting business. A lot of the boomers that have no mortgages, hundreds of thousands in equity or millions in a lot of cases, they want to downsize and they want to be closer to their kids and their grandkids. Those two niches is what converted in 2025. So, what are you doing in your business to be able to go after the transactions that are occurring? This is something that I think is great for you to start thinking about. And if you want to have the ability to go after some of these different types of bait, well, the death bait would be these are questions that you can ask and be able to answer through a blog if you have one, in social media. That's the clients that want to have answers to these questions. What happens to the home after death? What's the difference between a will and a trust? Should your home be in a trust? What's the inheritance tax? These are conversation starters for you to start thinking about how can I address these questions in a way and get that information out to the public. If you want to go after debt bait, which again are reasons why people buy and sell. What's your household debt rate? That's a good question. What that means is taking into account your mortgage, your car loans, your student loans, your credit cards, what's your rate on all that aggregate debt together? For a lot of people, they go, well, I have a 2.75% mortgage. I'm not going to do anything. Well, what if they have 50 grand in credit card debt at 28% and they have an 8% car loan and they have 6% student loans? Would it make sense to maybe either refi and consolidate all that debt or sell, pay off all that debt, and then buy something different with a 3-car garage where they have a 2-car garage now? And even though the rate would be higher on that new mortgage, they may actually have overall payment savings on the household budget because they were able to clear off all that debt and then go get a house that they're actually happy with. These are things that we have to be creative and try to manufacture transactions that ultimately will help our clients out, but they just don't see that yet because they haven't been advised and educated on what their true options are. And this is where you bring in a lending professional to be able to have these conversations as well. So these types of conversations I think are important for you to start thinking about. And again, incorporating these questions into who you want to target as an audience to get business. And then divorce bait. We work with a couple of real divorce attorneys, and a lot of these conversations we have is, unfortunately, there's a lot of divorce. Is the spouse, if one spouse is keeping the home, will the lender financially verify they can afford it? One strategy we've used with divorce attorneys, and we can partner with you as a real estate professional if you know any divorce attorneys, or we can develop a marketing plan to go after them, would be they have clients that come to them. Obviously, they're getting divorced. Let's say wife's going to keep the house, husband's going to move and find something else. Husband's working in this example, wife was at home with the kids. Instead of a lump sum payout that the husband will give to soon to be ex wife, what if we instead structured in the divorce decree annuity payments to the wife, because then we can use that as income, which will then help her qualify for the mortgage to be able to keep the home in the first place and qualify and get the husband off the loan. Instead of a $200,000 lump sum payment, where that's kind of how divorce attorneys typically structure these buyouts or divorce decree settlements. It's just, all right, let's get the X a lump sum payment and everyone gets to move on. That's not necessarily a good thing if the client maybe doesn't have the income to be able to afford that approval on the mortgage to keep the property in the first place. These are just little strategies that you can bring value as a real estate professional and partner with a mortgage lender who knows how to structure these things, talk to divorce attorneys, and be able to save transactions, offer a ton of value to clients. That's just one nugget right there that we've been successfully doing on the divorce side. Sorry, my light keeps turning off here. On the divorce side, if that's a type of bait you want to go after. So kind of as we switch gears here is, what's the number one thing a lender can do for you in your business? And I'm going to ask this of the group here. What's the number one thing a lender can do for you to help you in your business? In the chat. Get more business. Yep. That's one for sure. HomeBot. Yeah, we use My Home IQ, which is a HomeBot equivalent. We can do better than that though. But HomeBot, My Home IQ, those are great tools that we have. We can offer you as a real estate professional. Some of you might be using this as a way to offer kind of a monthly, what they call HomeBot report to past clients. What's the value, how much equity they have, and just a touch point for past clients. It's a really great tool to have. What else? Yes, help convert the business that you refer to your lender. And I think that's the biggest benefit that we as lending professionals can help you is conversion. Here's the top reasons contracts fell through in 2025. Number one was inspection. So 28% of deals fell through just due to inspection. Not a lot we can do about that as real estate lending professionals. If it's just the gap's too wide, the seller won't make the fixes, or the work's just too egregious, we walk away. But I want to talk about the 23, 14, and 13 ones below that. Buyer seller got cold feet, nervous, almost a quarter of the time. Deals fell through. Why do you think that was? What does that actually mean? More often than not, it's probably has to do with affordability, payment, financing issue other than high mortgage rates. Okay. That kind of parlays to the nervousness. Maybe they just weren't educated. And then financing due to high mortgage rates. So almost 50%, when you add these three numbers together, almost half of the transactions that fall apart, I would argue, have to do with the financing and the educational process that those buyers went through. If your clients are working with, no offense, Joe Schmo at Rocket Mortgage, and you haven't had them work with somebody who can help overcome this 50% of fail sales in contracts, you may be working so hard. And I know you as real estate professionals, I know a lot of you grind so hard. The last thing you want to do is put in all this time, energy, and effort, and then have your client work with a lender who has not done a pre-purchase discovery call. They haven't had a total cost analysis report sent to them. They haven't had conversations about affordability. They haven't addressed the rate conversation up front. They haven't educated them on how we can drop their rate at no cost down the line should rates drop. They haven't showed them temporary or permanent buy down strategies. They haven't gotten them fully underwritten. They haven't been able to show that they can close quickly so that they can leverage maybe a big seller credit to offset costs, to be able to put some more money in their pocket. They haven't done any of that. And what ends up happening is because on your end, you don't have a convicted sales process either, and you let the client work with whoever, that lender not being great is going to sabotage all the hard work that you put into this. And this is what I see all the time. A lot of real estate partners we work with, it's like, hey, I can't get this client over to you because they're really married to this lender or they're married to this rate. Okay, I get it, but how can we overcome that? Because ultimately, if that lender just is promising some low rate, but they don't actually know what they're doing, one of these three things is likely going to pop up where they're not going to be able to help convert that client, and you're going to be out showing them multiple homes over and over again. And you're going to have fail sales. And I know some of you have already experienced that. Who the lender is matters. And so this is a huge deal for you as a real estate partner of ours, is we want to be able to give you two things. We want to turn concern from the consumer into confidence with data-driven clarity. With the technology that we have, which I'll briefly show you. And this should say number 2 right here, create an unforgettable client experience to design an annuity of referrals. We want to knock it out of the park so well for you that ultimately, based on our process we take our clients through, that they're going to refer you at least one transaction to coworkers, friends, family. If we partner together, do a great job for the client, and we both take them through our process, it's expected that we'll be able to get one transaction as a referral from those happy clients. And so we want to meet buyers where they are. So we do a discovery call versus just a standard pre-approval. And during that call, we have kind of this clear and concise delivery that we do with our presentation. Our communication and how we present things matters. So our attitude, our energy, data, charts, educational, just show it. We don't talk about it. We want to show you data and facts. And we do that to all of our potential buyers that we take through our process. We try to keep things simple in layman's terms, not use a lot of lingo. Clarity equals confidence. Confusion equals indecision. We've got to get the consumer to not be so confused. Okay. Here's an example of our pre-purchase discovery consultation that we take clients through. We talk about their financial blood pressure, take a bunch of notes on them. What's their debt? How much income, their FICO score, how many kids do they have? What's their asset situation? And we develop a game plan for them. We show them a clear payment range. Here's your max purchase price, say like approval amount. Here's your targeted amount based on what you want your payment to be. Here's our future rate review program. Should rates come down, what that payment would look like and where we kind of expect appreciation to come in your home in the coming years based on the county zip code that you're buying. Again, it's all about education. We talk about rate discount loan programs. You want to buy the rate down. What's the cost of that? Can we get the seller to pay for that? We just show them in layman's terms how to do all this so that they have a confident game plan of payment, cash to close, and the safe product that fits their short and long-term financial goals. And so a quick pop quiz is in the chat. When can a loan officer lock a rate in? A lot of real estate agents don't know this, and that's fine if you don't. When can a loan officer lock a rate in? Couple, I don't knows. Yes, during contract. That's exactly right. We cannot lock in a rate. Again, you may not have known this until we have an accepted purchase and sale agreement, because the rate's tied to the property address. So a lot of times a consumer doesn't actually get the conversation with the lender of, well, what's my rate going to be, until after they're in contract. And then they realize, oh, this rate's higher than I thought it was. Maybe they went up. This payment's higher than I'm comfortable with. And it freaks them out. And it goes back to that fail sale of why contracts fall through, because there was too much uncertainty. The client wasn't aware of what the rate and payment would actually be. And they're like, I can't do this now. When do most bring up the rate? When I say when do most loan officers? It's usually like at point of sale, like when they're in contract. Our team, we bring this all the way to the front on our first call. I address rates, how they work, and I educate the client so that they know that we shop them with 30 different lenders and that rates are changing Monday through Friday, just like the stock market is. and that we can't even get you into your rate lock until you're in contract. But I will typically show a higher rate so that we have a buffer in there, because ultimately, if they stay that level, great. Or if they come down, the client's going to be expected and surprised for the better, not for the worse. And so we go through the visual proof of market updates. What are MBS or mortgage-backed securities doing on a daily basis through showing them what bond prices are doing and that those are inversely related to rates? We try to break this down and educate them in a way that is simple and easy to understand, and that they know we got their back. We go over their rate board. Mr. and Mrs. Buyer, you can have a rate as low as 4.75% or as high as 8.625%. See the gamut? Because everyone goes, well, what's my rate? You pick the rate. Anytime a client asks me, what's my rate? My answer is, hey, I'm not trying to be sarcastic, but you actually pick the rate you want. And here's how that works. If you want 4.75, Mr. and Mrs. Buyer, in this example, you would have to pay $44,796 to get that rate. Is that something you want to do? Whoa, no, that's way too much of a cost. Great. Then let's find you a rate that fits the cost that makes sense based on how long you're likely going to keep this loan for and the property for. And so this is an example of a rate board that we show and go over our clients during the original pre-purchase discovery call, so that they are empowered to know that they pick the rate that they want based on a multitude of factors, and that this is part of that educational process to get them comfortable. We show them the break-even analysis. Based on this strategy that we're recommending, you would save this much money over the time you're likely going to be in the loan for, savings over 24 months. And so we want to provide an unforgettable client experience, and how we can do that to partner with you so that you can convert more business and close more business and not have to just go get a bunch more leads, is let's actually help you convert the clients that you have. Because most lenders, the buyer will work with the loan officer and that's it before they find a home. Here's how we work. You're going to work with the buyers, work with me. I do have a team, but it's the underwriter. I'm not as important as maybe real estate agents think that we are, or the client is that I don't approve loans in sales. The biggest and most important person in this entire process that you will never meet is the underwriter. So what we do is we actually get the underwriter and me up front, and we work together and get your buyers fully underwritten right away. It's a requirement of our team. So that way, that decision maker is already vetted and looked at everything, and we do upfront underwriting. And we do this during the discovery stage while we're nurturing these leads for you, educating them. During contract, we'll call the listing agent. When an offer is made, their clients have one phone number and email, which is my cell, personal cell, and email, as do you. And we're not sending your clients to a bunch of people on the back end and not having them work with me. So it's very important that we have the buyers know you're going to work with me. I do have a team behind, but we're going to work with our underwriter, and we're going to get you fully approved. And we use kind of the humanized approach versus just technology and automated bot stuff, which we have, but I want the clients to be able to talk to a human, and that is going to be me directly. And so after they find a home, most lenders will ghost their clients and they never hear from them again. These are things that we do. We have a post-closing concierge team. We have a whole system that once we close, we want to help co-market you and keep in touch with the clients and buy brain cells with rate watch monitoring, annual reviews. We do monthly home performance reports, and that's through our My Home IQ software we have, similar to HomeBot that we mentioned earlier. And then we have some AI technology that we use for our partners and all that. And again, it's creating stickiness. And so kind of as we wrap up here, is it unreasonable for you to expect the ability to get one closed transaction and a referral from any clients that we can do business together and help convert and get into a property? And that's our goal for 2026. As you think about your business model, who are you partnering with on the lending side? Do you know what your lender's sales process is? And if you don't, I would ask them to show you. And if not, I would love to kind of, again, talk about what I just kind of briefly showed today which is next year is going to be a really good year. Rates are going to stay kind of low in this kind of high fives, low sixes range. I do feel like they'll drop a little bit for a short period of time, even more. But if you're expecting rates to plummet, that's not the forecast right now. And for that to happen, we require the economy to kind of fall off the rails, which I don't know if we necessarily want. Think about your leads that you got in 2025. How many did you convert? How many current buyers are out there that have not bought that you feel like should buy, or maybe need to get a refreshed opinion from another lender? We would like to be able to talk to them because the educational process and our systems are so dialed in and good that we feel confident we can speed up the buying cycle for these buyers, get them comfortable, and get them on a game plan. And so I appreciate you watching this. I hope you found value in this. Again, I'm happy to share the presentation slides here, PDFs, for any of you that want those. Just reach out to me and let me know if you'd like that. I hope you have a wonderful Christmas, happy holidays to you, and we will talk to you in the new year. Take care.